a holiday shortened week, but it is jam-packed with all kinds of data, with the king of data being the NFP on Thursday. And that'll be a shortened session here in the US. So the whole market is um, buying into the narrative that lower rates are on the way, and that there's going to be the shadow Fed, and also going to be an earlier nomination for a new Fed chair. So we'll see if the narrative's right. I have a little bit of a contrarian view. I'll get to that after I talk about the yen. Well, I'll start off with Canada. So, we caught a lot of this, and then I liquidated because I was looking for a new low in the dollar, thought Canada might follow that along. And then we had the trade tensions between US and Canada over some tax on technology, and Trump ended it, and then Canada relented. The interesting part is, though, although trade talks are back on between the US and Canada, is that USDCAD did not give up a lot of these gains. Okay. We're still putting in higher lows, which is, different than the dollar making a marginal lower low today. Actually, a little stop hunt there. So I would say that the Canada is tipping its hand, and say, for example, the dollar low is not in, and that we're going to make a move back down towards this trend line around 96 in the coming days or weeks. I would use any weakness in Canada to accumulate it. I think, that it should hold these lows or retest the lows, but not make new lows. It might even hold here. If we get back over 3750, that also is a signal, because that's going to be a little bit of a breakout, and that we have A, B, and C wave is underway for a move to 139 to 141. So that's my view on Canada. The other currency that's acting like that is also USD NOK, not giving up much ground with the dollar making new lows. This too would be a buy and a break if dollar makes a new lows, maybe towards 10, which would just be a correction off this first wave up. I want to talk a little bit about the yen here. I do believe that there's a shot for um, the yen to take out this little double bottom and head down towards 143. I think that's going to be a very important level. And should we get this break to 143, I'll be looking for longs. And maybe by then, yields are plateauing, because I think they're going to make a move to the upside. All right. So I know the correlation is not that tight nowadays between the yen and the 10-year, but I do believe after we get down here that if when the dollar rally is in full force, that the yen can make another move up to challenge its high. And guys that know my work would know why I think that could happen. This was a confirmed high. So this is, I'm viewing as a correction. I don't think we're going to take out these lows and eventually make a new high that may or may not confirm above 148. So one more decline, just like the dollar, and I put out some shorts last night. Took 30 pips. I was risking 80. I'll hold it. See if I could get my targets down here. Taking a look at the euro. Euro had like a little three drive here, but I still think there's an opportunity for the euro to make a move up towards 117.80, 118. I'd be taking shorts up there. We'll have divergences. Looks like a little three drive up. So I think you could be a seller on a rip up towards that 117.80, 118 level, and probably risk 1%, 120 pips up there. You don't want to ride it if it takes it out. I think it's a 78.6% retrace. And keep this in mind. There really is, no one thinks that there's going to be problems with the trade deal with Europe, but we all know how President Trump feels about Europe, all the threats. What if there's an issue with a trade deal in Europe. Could that be a problem for the euro? I think it could be. Maybe that's going to be the catalyst. The other catalyst that I think is possible is, I'm really not impressed with this rally that we had, that we're getting, still continues in the bonds. I know there's all types of stealth QE talk. Uh, Rates are going lower, but this kind of rally, I guess you could call it a base and it's just grinding. But look at this low on the 4 hour, and that was a Moody downgrade, that it was a confirmed low. There was no divergence there on the 4 hour. So, one bad day, one bad number could change a trend that's just grinding up. I guess I could put in some type of uptrend line to give you a look at that. So say we anchor it from here. Was all right. So there's your real important area is coming in if we start getting back under this 87 level, 86 and a half level. We could very easily see new high yields. And the 10-year, we're diverging all over the place. If we get back over 433, I think that's going to arrest the decline in yields. And then you have to be open to the pain trade would be higher yields, especially with the narrative that lower rates are a layup. It's a gimme. It's just a matter of how much and how soon. And it's very possible that this whole triangle that we're in can resolve to the upside. So, is there any reason? Yes, we have a little breakdown, but back above this 434 level would negate the breakdown. That's your first indication that the narrative for lower rates could be put on hold for a while. We'll see. I don't think that Powell's going to cave to the pressure. Also, we're going to see what tariffs are going to look like. We're still going to have higher prices, especially from China, and it's not going to be 1%. You'll be able to see that reflected in the prices that Amazon's going to have up on their website in the next several weeks. You'll see the price increases from things manufactured in China. S&P's again roaring, but you know, like I talked about last week, that there are some option pegs that are coming off. Tomorrow's the first of the month. Don't get FOMO. I still think you're going to have a chance to buy the market cheaper. Sometime, I don't think we're just going to melt up to 6,400 from here. We're starting to get some, the daily divergence is there. There's also some type of, I look at things like 30-minute, we're diverging up there. And something else that bothers me about this rally in risk is that Bitcoin is not leading, it's lagging. And Bitcoin may be peaking up here. I wouldn't have FOMO in Bitcoin either, that we could be putting in the top. And then if we start getting back under 106, it opens up the door for maybe even taking out these lows if the whole rate picture is the wrong way. So we'll take a look at the dollar to wrap it. I have a little bit on. Is this a low? It could be. We did get a nice little divergence on the 4 hour, which builds the case. It's the first new low above 40. See, this new low was 30. This low down here before a good rally was 25. So we have what I was looking for, the condition of a new low. And it was only by about 3 pips. So again, I've stressed this a million times. I'm going to do it 1,000,001 time. Do not put your stops 1 pip under a low, because you're just liquidity for the algos. You have to let it breathe and give your stops at least, 0.75%. I like 1%, or at least a daily ATR, or you're going to get picked off and be right the market, wrong the trade. What if this is the bottom and you're out at 52 and we're already 30 points to the good from where you were taken out. Do not put your stops 1 pip above swing highs and swing lows, or you're going to be a victim of a stop hunt over and over again. So if you feel like it's too much to risk 1%, I have a solution. Reduce your leverage and let your trades breathe. And most of all, remember, don't just count your pips, count your blessings. I'll see you in the room. Good hunting.